HCLTech came out with numbers which, relative to the estimates, obviously disappointed, but very interestingly, the management went out and said that despite a slow start to FY24, they will reach the guided range of both the revenue numbers and the EBITDA margin numbers, which means a very impressive CQGR for the next 3 quarters. C. Vijayakumar is with us to talk about, well, the quote-unquote hiccup in the quarter, but more importantly, the confidence for the quarters ahead, because that is what will mean. That is what will be important for shareholders as well. CVK, great having you. Thanks for taking the time out. Good morning to you. What explains the miss in the quarter, CVK?
Yeah, Neeraj, usually Q1 is a seasonally weak quarter, but in reality, it came even lower than our own expectations. And it's kind of 2 sides to the coin. 60% of our business in 3 of our largest verticals, financial services, manufacturing, and life sciences and healthcare, which contributes to 60%, has delivered a strong mid-teens year-on-year growth in constant currency. The challenge has been in technology and telecom verticals, where we saw sequential declines. And we have a higher exposure to these verticals in our engineering and R&D services, where we are dependent on some of the discretionary spends and projects. And that's where there has been some reduction in the spend and some ramp downs, which has been necessitated. So I think those 2 verticals really contributed to the weaker than the expected performance in Q1.
So are these client-specific elements at work? And part 2 follow-upping there is because the ER&D revenue, after a 3.8% decline in Q4, has seen a sharp drop as well. But you also have, I believe, some other news flow surrounding that vertical. How do you see that piece shaping up for the quarters ahead, CVK?
I do believe it is stabilizing at this point, and we should see growth from here on in these 2 verticals.
Got it. Okay. Starting Q2 itself, or would it be kind of more spaced out? And
that is our expectation. You to see how it pans out, but that's what we expect.
Okay. There is also okay. Let's first talk about the new deal TCV, which also was down about 25% QOQ. But I believe in the con call or in the press briefing, you stated that this is a one-off, and you continue to believe that the impressive run rate for the past 7 quarters of over 2 billion, you see no reason to see that will change in the quarters ahead.
That's absolutely right, Neeraj. If you heard me last quarter, I said our pipeline has increased significantly compared to the December end pipeline, and even June pipeline is higher than the March end pipeline. And usually last 2 quarters, it's really been an uptick. Now it's time to convert them into wins, and that's what we are hoping for. We expect to deliver a strong booking in this quarter.
Yeah, I believe you said that you are in the advanced stages of some very large deal bookings happening, which gives you the confidence for the 6 to 8%.
We did not talk about anything specific, but overall our pipeline has number of transactions which are in the advanced stages. So that gives us some confidence that the dip in booking in Q1 will be more than made up in Q2.
Okay, and just this, I mean, the TCS CEO was on record saying yesterday that they don't see very large ramp downs. You mentioned that ER&D may have seen, but otherwise you don't see. You have this confidence of this very steep 3.1 to 4.4% CQGR for the next 3 quarters. Clearly, things are not looking bad for the remainder of the year.
Yes, we do believe, I mean, it's really coming from the strength of our pipeline. I mean, I do acknowledge that Q1 booking was much softer than our traditional 2 billion plus type of new bookings. But even 1.5 is all net new booking. It's not renewals and things like that. So I think this 1.5 will also contribute to some growth. And there is a strong pipeline which will also convert. We expect to have a strong booking in Q2, which will deliver some decent growth in the second half of the year. Wow. And you also see the trajectory that we've had in the past year. Q3 has been one of our strongest quarters because even the software business will peak in Q3. So I think putting all together, we will have a good CQGR from here on.
Well, and then the street likes, of course, all of this in the new dividend policy, or not the new dividend policy, but the dividend policy that you have as well. CVK, a word on this acquisition that you're planning, that you've announced, the ASAP Group, if I'm not wrong?
It's a very, very interesting acquisition and interesting space. If you look at our ER&D services and ER&D outsourcing, almost 20% of the spend is really coming in what is called as automotive segment, like automotive software, electric, mobility, autonomous, all of that is a very big spend area for a lot of auto majors. And we had capabilities were more in the traditional side in PLM and things like that. And this company brings, they service a lot of electric automotive market segment. And bringing our software capability and the global delivery capability, we think it's a strong win-win kind of combination. It's about 153 million euros annual revenue in calendar year 22. We're paying something like 250 million plus euros for this acquisition. And we expect it to be a good growth driver for us.
There's a talk that the future car will be a computer on wheels and software will define that. You angling for that too, CVK? You believe
absolutely. I think that is where a lot of spend is. I mean, all the electric cars today have significant amount of technology in it and significant amount of compute capacity in it. And all of that is very, very strong areas for a tech services company to really play in.
Got it. Okay. See, we get last two questions. Both of these are maybe repeats from the previous quarters, but it's good to get an update from you every quarter. One is on how the issue of last year, which is employee attrition, seems to have been contained for you. It's come off significantly too. How do you see the trajectory?
Yeah, I think it's very much under control. I think our attrition was about 16%. That's what we had called out. It's quite stable, I think, and we are comfortable with the situation.
Okay, and this is around the number that you'll be comfortable for the future quarters as well, or do you see this coming down? Okay.
15, 16 is a good number, which is we'll be comfortable.
Is a good number. Okay. My final question, CVK, and that is more about how are client conversations per se since the start of the year. There has been fear. Talk to us about the environment there.
I think customers, there are some verticals which so far had which even continues to have a mindset towards more optimization than investing in new programs. I think that is still quite prevalent. But I think the predominant conversation, as I mentioned even last quarter, is how do they become more efficient using technology? And I think that's where we are playing in, not just technology transformation, but also global delivery model. I think these two levers everybody wants to leverage a lot more. And that's where large outsourcing opportunities are.
Okay, well, State Farm and some other deals in the offing for HCLTech, a new higher dividend policy. Maybe this quarter is a hiccup. We'll get to know more from CVK in quarter two. They are confident of good delivery ahead. CVK, thank you so much for taking the time out and speaking to us today.
Thank you, Neeraj.
Pleasure is ours, viewers. Thanks for tuning in.